Hi there, welcome to Kneppy Invest. I had not planned on doing a video for Kogan, but the company did release a business update on the 28th of July, and the share price rallied on the back of this announcement. In fact, the share price rallied 50%. Now, in my opinion, Kogan's share price below $3 represented really good value for the future potential of this company. So, in a way, this is not surprising, but in another way, when you look at the particulars in the business update, there's nothing to suggest why the share price rallied 50%. So I'll go through this particular business update during this video. Now, a couple of possible reasons why the share price did rally include short sellers covering their position. Sometimes you will see this, particularly in those companies that are heavily shorted. And Kogan has been heavily shorted, and that is one possible reason. Another possible reason is we are starting to see really beaten down companies, particularly buy now, pay later, and other tech companies. We're seeing or starting to see their share price of these companies starting to rally. And that is a hint from the market that they think this interest rate cycle we're in right now, where interest rates are rising quite rapidly, will come to an end, possibly an abrupt end in a few months, when the central banks realize the economies are suffering and inflation is starting to fall. Now, on the counter side of that argument, we are starting to see, and we saw a few really positive trading updates from companies, not only in Australia, but also overseas. So this possibility that we're going to be moving into recession. Now, America just announced that they had negative GDP again for the second consecutive quarter. But then you look at unemployment levels, and they're really low, and spending hasn't really decreased all that much. In fact, we've seen a few positive trading updates from retail companies on the ASX. I think Mosaic Brands released a fairly positive trading update today, which is unusual because recently, about a month ago, or maybe just over a month ago, they really released a fairly negative trading update. So I'm not sure what's happening with that company. So a lot of different signs in the economy right now in terms of where we're heading. And to be honest with you, I have no idea what's in store for us over the next few years, even the next few months, in fact. So all I want to do is just to see what's happening with these individual companies and see how the market is reacting. And if I do see any value in a lot of these companies that I think will be bigger in 5 to 10 years, I will take a position in the company. I am a shareholder of Kogan because I think there is that potential. This will be a significantly bigger company in 5 to 10 years, particularly if management make the right decisions. Over the past 2 years, management have not made the right decisions. They've done some stupid, idiotic things, including significantly increasing the inventory levels. And it looks like based off this announcement, they've learnt their lessons, hopefully. So let's get into why, well, maybe not why Kogan rose 50%, but just looking at the commentary in regards to this business update from Kogan that was released on July the 28th. The first bit of commentary in this announcement was actually quite positive. So the company announced another year of record gross sales. And to be fair with you, this company should be growing their gross sales, on a continual basis. If we start to see gross sales falling for Kogan, that would be a fairly negative sign. And the return to positive quarterly adjusted EBITDA in the fourth quarter of financial year 22. This company should be positive EBITDA every single quarter. Now, I would prefer a company to mention or look at cash flow levels and also inventory levels, because operating cash flow will be affected by changes in working capital, which include inventory, receivables, and payables. That's the thing I'd like a company to focus on. But the majority of companies in the world seem to really love EBITDA and adjusted EBITDA for some reason, even though it's BS earnings as described by Charlie Munger. But this is a positive start to the announcement. So this could be one of the partly an explanation for why the share price rallied 50% on the back of this announcement. In the next part of the announcement, there are also some positive things to see here in regards to Kogan. We are making the business leaner to enable us to pass on cost efficiencies to customers in the form of lower prices. A leaner company means we discontinue parts of the business that are not delivering value to customers or shareholders, and also gives us the flexibility to respond to significant ongoing changes in the macro environment. A few things to unpack here. I do like lean companies who keep a control on their costs, and it seems like they're going to pass on those lower costs onto the consumer in the form of lower prices. Now, there is a possibility in the future that will lead to lower margins. That's not necessarily a bad thing. Costco has really low margins, but I think this is going to be important for this company moving forward. If they can maintain some really good cash flow profitability with these lower prices, if they remain a lean company. Now, I do like that they are discontinuing parts of the business. Now, I think they've been too aggressive with starting up new ventures. So Kogan has always been releasing stuff in regards to credit cards, electricity, those sort of things. And the majority of those more than likely will not work in the long term. A few of them would, but I do understand where they're coming from here. Some parts of the business are not working, and we're going to discontinue that. And that will actually lead to some efficiencies in the company and some lower costs, and that would lead to the company being leaner in the long run. They also mention here the flexibility to respond to significant ongoing changes in the macro environment. This is important because they've adjusted to significant changes in the macro environment quite badly over the past 2 years. They've overreacted or maybe even underreacted in certain situations. So I do like this talk of being flexible. And the best way to being flexible is if you have really good cash flow in your business, you increase your cash on hand, and that's how you do become flexible in the short to medium term, even in the long run. So I do like the wording here from management. They are looking at the business model, and trying to change how they've been performing, how they've not only been performing, but how they do perform in the future. So that's the commentary from the company's management. To be fair with you, nothing in the commentary really explains the 50% rise in the share price. And so let's have a look at some of the numbers. So we have gross sales, gross profit, adjusted EBITDA, group active customers, Kogan First members, cash position, and also inventories at the bottom. Those are the two things I'm actually most interested when it comes to Kogan. Now, gross sales grew by 0.1% above financial year 21. So they're actually comparing gross sales, gross profit to financial year 2020. So that's understandable because they want to be positive. And the best way to be positive when the gross sales and gross profit look pretty bad when it compares to financial year 21 is go back to financial year 20, and that way you get bigger numbers. For instance, gross sales have grown 23% since financial year 20, and gross profit at a CAGR of 20% since financial year 20. So you sort of not really ignore that gross profit declined 9.4% from financial year 21. You're comparing from 2 years ago. This is the job of management, to be positive in these sort of updates, but don't hide the truth. So you have to understand this if you are reading this business update, that they want to be positive, but they're not hiding the truth. Adjusted EBITDA was $19.1 million for financial year 22. Group active customers are growing. You want this to be growing again. They've compared it to financial year 20. I would like a comparison to financial year 21. Kogan First members have grown by 210% since financial year 21. So they've changed the way, or the comparisons here, from financial year 20 to financial year 21. I don't like that. I want a similar comparisons in all these. Now we get to the two things that I'm more interested in. Cash position, so cash flow from operations, free cash flow, that sort of thing is important, and also inventory levels. So the company increased the net cash position, total cash less drawn debt, to $31.2 million from $12.8 million at the end of financial year 21. The question I have is, how did they get there? Did they do any capital raisings, that sort of thing, or is this increase in cash straight from cash flow from operations and free cash flow? And then just as important is inventory levels. So inventory levels, 161.1 million, 139.2 in warehouse, 21.9 in transit. This reflects a significant unwinding of inventories from total inventories of 227.9 million at the end of financial year 21. Now, this is important because this is a change in working capital. And we've seen a significant decrease in inventory, And that means the cash flow from operations, that increase in cash flow or cash position is not quite as impressive because they're really winding down the inventory levels. So you've got to take that into account, that change in working capital. So overall, when you look at the numbers in this particular part of the announcement, nothing that really leads me to understand why the share price rallies. Nothing really impressive in any of these numbers. Potentially, the market was expecting worse news from Kogan, and because this was better than the expectations, that's why the share price rallied. And then towards the end of the announcement, we did have, I think this was in the appendix, just some raw numbers here. And they use, or comparing financial year 20, financial year 21, and financial year 22. They also had movement and CAGR. So looking at gross sales, gross profit, and adjusted EBITDA, and looking at the different divisions here or different segments. For instance, exclusive brands, third-party brands, Kogan Marketplace, Mighty Ape, Kogan Mobile Australia, advertising income, and Kogan First in the gross sales. So the majority of their divisions or segments actually fell from financial year 21 to financial year 22. Exclusive brands fell by about 60 million. Third-party brands fell by almost 90 million. Actually, that's almost 100 million. But Kogan Marketplace actually rose by 60 million, and Mighty Ape more than doubled. So just looking at these raw numbers here, Mighty Ape is performing really well. Kogan Mobile Australia fell, advertising income rose, and Kogan First more than doubled as well. And then when you look at gross profit, Kogan fell from 183.8 million to 145.6 million, but Mighty Ape actually increased by 19.9 million to 38.9 million, so almost doubled there for Mighty Ape. And the same thing is true for adjusted EBITDA. Kogan actually fell from 54.9 to 6.9, but Mighty Ape adjusted EBITDA actually not quite more than doubled, but 6.9 to 12.2. So, in fact, the way you could argue is Mighty Ape outperformed Kogan in financial year 22 based off the adjusted EBITDA numbers. On first look of the business update, I was not positive, not really negative. Now, the business update did not tell me anything new about the company. There were some positives in there, some negatives as well, but I did not expect the share price to rise 50%. So let's have a look at how the media reacted to Kogan.com's business update. And these are headlines from a few news articles in Australia, from the Australian, the West Australian, AFR, Daily Telegraph, and Power Retail. Now, mind you, a few of these headlines are from companies or media outlets that are owned by the same company. I think a few of these are Murdoch-related newspapers. Anyway, the Australian mentioned Kogan.com sales have stalled to a halt, profits collapsed in 2022. Kogan.com reveals minuscule annual sales growth of 0.1%. AFR mentioned Kogan says financial year 22 sales flat, confirms profit slide. Daily Telegraph, Kogan.com profit slide as stale store. And then Power Retail, whatever that is, times are changing, Kogan on lackluster Q4 22 update. So if you just looked at the media headlines, you would think this was an absolutely horrible business update from Kogan, and the share price should have collapsed, but it did the complete opposite. So there is that potential that the media are just focusing on these numbers of financial year 22, and they're not looking in the future. And there's also that potential. The market is looking in the future, and they think Kogan has hit a bottom, and Kogan will experience some pretty good growth in the next few years. And that's why the market was buying quite a few shares in Kogan.com. Now let's have a look at the charts for Kogan, and this is the weekly chart going all the way back to the time the company listed on the ASX in 2016. You can see for about a year after they listed, share price just went sideways, and then we saw a bit of hype towards the end of 2017 into 2018. Share price rose from about $1.50 all the way to high to 10. But you'll notice that there is a lot of volatility in Kogan.com's share price. So the best time to buy Kogan.com is when there's a lot of negative sentiment in regards to the company and the share price gets fairly low, or the value of the company gets fairly low. So we saw the share price decrease from $10 to about $2.50 in 2018. And then we saw the share price get down to about $3.50 during the COVID-19 financial panic. And then the company saw a lot of tailwinds, and that's why the share price rose from $3.50 to a high of $25 in about 6 months of trading in 2020. And as soon as the vaccines became general knowledge, that was the time to sell Kogan.com. That was the end of this online tailwinds behind these sort of companies. Kogan.com, Redbubble, Temple and Webster, those sort of companies saw their peak in the share price towards the end of 2020. More specifically, I think it was October 2020. The share price of Kogan fell all the way from $25 to about $3. In fact, share price has been below $3. In fact, share price fell below the COVID-19 lows. Now, this horizontal dash line is the lows we saw back in 2018. And funny enough, the share price of Kogan did not get below that 2018 low. And this is all about traders seeing the share price at these 2018 lows and thinking there might be some value here and expecting a possible run up in the share price, particularly if the shares in this company were oversold. And we saw the shares of Kogan.com go sideways over a 7-week period just above that support level at the 2018 lows. Now let's have a look at Kogan's daily chart. This goes back to May of last year. A few things to unpack here, but the share price has been in a downtrend during the past 9 months. In fact, it's really been a downtrend for over a year. Now, if we go back to a period between about June and October last year, there were 3 different instances where it looked like the share price of Kogan wanted to rally and that potential downtrend was coming to an end. You can see the share price going up, getting above the 100-day moving average, which is the top purple line, and then that rally just ran out of puff, and then the share price pulled back quite significantly. Now, one of the reasons why those rallies or potential rallies faltered was because of the lack of volume, lack of conviction in the market around the increasing price in Kogan, and the share price remained above the 100-day moving average for about 3 to 4 trading days and then fell below. And then from about October last year to recently, the share price has been in a well-defined downtrend, well below the 100-day moving average. In fact, well below, on most occasions, below the 50-day moving average as well. And then we've seen the share price hit or get very close to that 2018 low, and we started to see share price go sideways. So I think there were some investors seeing some value in Kogan over the past month and a half, and that interest or a return to interest in Kogan kept the share price above that support level. And then, of course, on the back of this business update, the share price rallied 50%, and the share price closed at above $4.50, about $4.70. And that share price of $4.70 is above the 100-day moving average, just like we saw for 3 instances between June and October last year. So it's very important over the next week, we'll say 3 to 4 trading days, the share price remains above that 100-day moving average. If we see a lot of selling coming in and the share price pulls back significantly, say to $3.50, this will be another failed rally in Kogan's share price. But the main difference between what happened yesterday on the 28th of July and what we saw last year between June and October is this increase in share price was on significant volume, much higher volume than what we've seen over the past year, year and a half. So that's one thing going for this potential rally in Kogan's share price. That's all I have for this video on Kogan.com's significant rally on July the 28th. Share price rose 50% in one day on the back of a business update that, to be fair with you, to be frank with you, was not that impressive. There must be some other reason why the share price rallied, why the market took this instant liking to Kogan.com. So the question is this the bottom for Kogan.com? Is a share price under $3 the lowest we're going to see for Kogan.com for a long time, perhaps even forever? So if you do have any thoughts on Kogan.com, reasoning why the share price rallied, I'd love to hear from you because I'm not sure. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.